Welcome back to Finpod, your daily financial digest. I am your host, Evan, and today we are breaking down a market that refused to stay down despite geopolitical jitters. Finpod is brought to you by Fintwit.ai, your go-to platform for real-time trading signals and stock recommendations. Let's dive in. Meta is front and center. Shares jumped about 5% today as investors digested reports about the company's massive infrastructure build-out, including new data center investments and a multi-year deal to secure memory chips. While there was some early turbulence, the market clearly likes the long-term AI strategy. Microsoft is also in the spotlight, though the story is a bit more mixed. The stock saw some pressure after reports surfaced that the company is increasingly swapping out external AI models from partners like OpenAI and Anthropic for its own internal solutions. It is a classic case of a company trying to own its cost structure, but investors are clearly watching the implications for its partnership ecosystem. Micron is another big winner, rallying over 4% after announcing a massive $250 billion investment plan to bolster domestic chip production and secure critical supplies for the AI boom. Oracle is also catching a bid, up nearly 3%, as traders bet that the recent sell-off was overdone given the company's massive backlog of AI cloud contracts. Finally, Marathon Digital is the standout, soaring 10% after announcing a major land acquisition in Texas to build out gigawatt-scale data center capacity, signaling a clear pivot toward high-performance computing infrastructure. Shifting to the broader market, we saw a classic buy-the-dip session. Despite renewed tensions in the Middle East and fresh U.S. airstrikes against Iran, the major indexes finished in the green. The Nasdaq led the charge, climbing over 1%, followed closely by the Russell 2000. It seems the market is prioritizing the AI-driven tech rebound over geopolitical headlines for now. The SIBO Volatility Index dropped over 6%, suggesting that traders are shaking off the fear and looking for value. In the AI economy, the theme of the day is infrastructure and sovereignty. Companies are racing to secure power, chips, and data center space. We are seeing a clear shift toward companies that can build and control their own compute environments, moving away from just renting cloud capacity. This is putting a premium on hardware, memory, and energy-adjacent assets. Looking at other individual movers, ARM Holdings stood out with an 11% gain, continuing its run as a favorite for those looking for pure-play AI exposure. On the flip side, we did see some caution in the consumer space, which brings us to earnings. PepsiCo reported mixed second-quarter results. Revenue beat expectations at over $24 billion, but the company missed on earnings per share, and management explicitly called out tightening consumer budgets in North America due to persistent inflation. The stock reacted with a dip of over 3%. Meanwhile, WD-40 Company also faced some pressure, slipping nearly 3% after its latest update. As for Washington Federal, investors are still waiting as their next earnings release is scheduled for later this month. That is a wrap for today. We saw resilience in tech, a focus on AI infrastructure, and some real-world caution from the consumer sector. If you enjoyed this episode, please like, share, and subscribe, and drop a comment if you want us to cover a specific topic or sector next time. For stock recommendations, visit Fintwit.ai. Thanks for listening, and I will see you back here tomorrow.